Hello and welcome to the Opening the Gates 2025 UK property market update. Thank you very much to everyone who joined me in watching these updates throughout 2025. This is the first edition of 2026, and it's going to be an overview of all the 2025 market stats. So I'm going to jump straight into it. And right, let's do this. So 2025 UK property market update. Let's just zoom out a little bit. Okay, so just to confirm, so 2025 versus 2024, so year on year changes, and then we've got 25 versus the 20 to 25 average. So on the market, aka stock for sale, so up 6% year on year, up 21% on the 2025 average. So as I say in every one of these episodes, stock levels continues to rise. However, they do seem to have peaked, plateaued, and are actually at their lowest level now since the end of 2024. So it shows that we've got a pretty even balance between supply and demand, which is a really, really good thing. It's maybe leaning a little bit towards a buyer's market rather than a seller's market at the moment. We've just got a pretty stable market at the moment, which is really good. New listings up 2% year on year and 7.5% up on the 2025 average. So good news there. There's still confidence, not mass confidence, but quiet confidence from sellers to come to the market, even in all the uncertainty that we had around the budget towards the end of 2025. So a positive there. Sales agreed up almost 3% year on year, which considering we lost a third of a year to uncertainty over the budget, is really good going. And still 2% up on the 2025 average as well. Just remember on that, most of 2020 was crazy, 21 was crazy, first half of 22 was crazy. Then we had the difficulties end of 22, challenging 23, 24 returned to some normality, and then a game of two halves to 2025, which I'll come on to in some more detail. Price changes continue to be an issue in the market, up 9% year on year and a whopping 30% up on the 2025 average. So there's lots of price reductions happening, sellers and agents being a little bit too optimistic at the start. However, there is an argument that more price changes are happening where sellers and agents are realigning to market conditions, which is resulting in more sales happening. Withdrawals up 4% year on year and 16% up on the 2025 average. So again, price changes equal less chance of selling. If they're not selling, they're then coming off the market. Throughout 2025, it was roughly 55% of properties that hit the market would actually go on to sell. So there's obviously a whopping 45% that don't sell. There's a massive opportunity in 2026 to target these withdrawn properties. So if you don't already have a withdrawn strategy in place, I strongly recommend it. And if you need some ideas on strategies or letter content on that, please do reach out to me. Fall throughs up 4% year on year and 3% on the 2025 year average. So pretty steady there, but longer properties being on the market, more likely it is to fall through. The longer it takes to sell, more likely to fall through. Price reductions equal higher chance of falling through. So that's why I've seen an increase in fall through rates there. My message on this is to test the market on your website, on social media, before hitting the market officially on the portals. You can test the price, and if it doesn't work out, you don't damage it by having it as a price reduction. Then once it hits the market, it's perhaps more likely to sell quicker. Therefore, the fall through rate is going to be lower as well. Getting solicitors legally instructed, getting searches applied for. There's several agents up and down the country doing this sort of thing, and also doing reservation agreements. So if you don't have a single digit fall through rate, UK average is around about 25-ish%. So if it's not half that, definitely reach out to me. We can have a conversation on that. And then number of relisted, that is sellers who've tried to sell before, re-entering the market, down 12%, almost 12% year on year and 8% on the 2025 year average. So again, a lot of uncertainty towards the end of the year around the budget meant sellers who have tried to sell before were sat on their hands going, I'll just wait and see what happens as a budget. Lots of data out of Rightmove, on the market, Barclays, Savills, kind of reiterating that. But I do think we're going to see a surge in relistings in 2026. So going back to my earlier point, you want to be targeting withdrawn properties. So again, reach out to me if you need any help with strategies. Right, on to new listings. So average asking price for new listing throughout 2025 was 427.5. It was 427.5 in 2024. So literally the same, which shows that we've got a balanced, steady market, which is a positive thing. Average pounds per square foot has shot up a little bit from 371 to 387. Looking at my other screen, that is a 4.3% rise. So perhaps the higher end of the market hasn't been coming on as much, which is why prices have stayed stable due to, again, mansion tax uncertainty around the budget. But actually, if pounds per square foot has increased by 4.3%, it does mean that sellers and agents are perhaps still asking a little bit too much for property, hence why only half of properties are selling, and there's quite a few price reductions happening. In terms of sales agreed numbers, so average asking price of sale agreed 361.5 compared to just over 360.5 a year ago. And then the average pounds per square foot has gone up from 339 to 344. So interestingly, the average pounds per square foot for sale agreed up 1.5%. Average pounds per square foot for new listings 4.3%. So it shows that there has been modest house price growth, but those who are being more realistic with their pricing are the ones going on to sell. And those who are being unrealistic with their pricing and sitting on top of the market rather than in the market are just making the sellers who are realistic's lives easier to actually get them sold. Onto inflation. So inflation hit 3.2% in November, averaging 3.2% now. So again, steadily coming down. We had a little bit of sticky inflation throughout the summer, but it's good to see it coming down now. Lowest point it's been well, since the start of the year, really, which is really, real positive there. Obviously, that meant we then had the cut on the base rate from 4% to 3.75%. Maybe there'll be one or two more cuts to the base rate in 2026. Get it a little bit closer to 3%. The closer it is to 3%, the closer, obviously, average interest rates are going to be to 4%. When you look at average interest rates, they normally track at about 0.8% above the base. So if we're going to be in an environment of 3.25, 3.5, that means that we're going to see somewhere between 4 and 4.5% going forward. But predictions out there are not going to be mass cut to rates. House price index update. So as you know, I track 7 different sources every single month. I've been doing this, I think, since December or 2024 or January 2025 now. So it's been about 12 or 13 of these particular updates that I include. You'll notice there's been a monthly drop there. That is the fourth time I've recorded a monthly drop. So when I've done it for June, August, November, and this is for December. So 4 out of the 13. It's had a monthly drop. The annual change has never actually seen a reduction. I haven't double checked this, but I would say that 0.07 is probably the lowest I've seen since I've been tracking it, to be fair. So it shows that, again, house price growth is slowing, it's steady. It's certainly not going north with the current conditions. So again, sellers have to be very clear on the prices they're setting from the outset. What I'm just going to do as well is look at my other screen just to share a couple of things in terms of December as a month. So average asking price average asking price for new listings and average pounds per square foot did go up month on month and year on year. The sales agreed average asking price dropped month on month and year on year, but the average pounds per square foot for sale agreed went up month on month, year on year. In terms of December, month on month, basically all figures were down compared to November, understandably. Interestingly, number of properties returning to market actually increased, which is maybe a sign of things to come, as per what I've just said 5 or 10 minutes ago, of sellers going, budget's out the way, let's crack on with it. Year on year, properties for sales were up, new listings were up, price changes were up. Sales agreed were down slightly at 3.5%. And then December versus the 2025 year average, number of properties for sale up, new listings up, price changes up, sales agreed slightly down. So what that's kind of showing is if we look at it in isolation for month on month, the 2025 year average for December, more stock, more listings is meaning there's more reductions happening. Therefore, there's perhaps less sales on that. And then if I actually look at the Q4 stats as well, Q4 versus the average. more properties for sale, new listings up. Sales agreed were actually up compared to Q4 average, which is good to see, but price changes were up, withdrawals were up. So a bit of a mixed bag there. And then Q4 versus Q4 24, all the numbers were down as they were on Q3 as well. So it shows that we do have a pretty stable market, but we're not seeing a market of 2021 first half of 22 where you can just go crazy with it. So sellers need to be realistic if they're going to want to move in this market. Now, for those of you who watch these updates regularly, you might be thinking, well, hang on a minute, where is the mortgage data from Simon? So I'm going to touch on that. The mortgage data and completed transaction data hasn't come out yet, but I'll be sharing some bits online on that when it comes out in the next week or so. But what I am going to do is just confirm year to date in terms of mortgage approval data. So year to date, we've averaged about 64,500 mortgage approvals. That's to the end of October. Around two-thirds of property purchases are mortgage. So mortgage approval data at 64 and a half. Add on another third to that will take us to 100,000 transactions in theory as a future indicator. 100,000 transactions would equal 1.2 million a year, which is a very, very healthy market. And then in terms of transaction numbers as well, year to date to the end of October, we've averaged 100,000 transactions. So again, that would be 1.2 million if the transaction numbers continue on that trend in November, December. I can't imagine it's going to be 100,000 due to the uncertainty around the budget and perhaps less people moving at Christmas. But give or take, we're not going to be far off that, which means that we're going to be somewhere between 1.1 and 1.2 million transactions in 2025, which is a really, really, really good result. That's about 5% of owner owned property, excluding social housing, transacting every year. So yeah, for every 100 properties in your marketplace, 5% are going to move every year. Around 10% are going to come to market. So yeah, if you want to know how to use those numbers to go after your market, give me a shout. So these key stats for November, which come out of 27 Tech. This is the first time I've done this, so excuse me if it's a bit all over the place. But what they've highlighted in November from searches done on mortgages is that they had been falling in November, which doesn't surprise me. Again, people were sat on their hands going, well, let's wait to the budget. It'll be interesting to see what their December stats are when they come out soon. Product availability has hit a record high, though, so there's plenty of products out there for mortgages. You're seeing a lot more 95% loan to value products out there as well. And the easing in mortgage lending criteria, the regulations is certainly helping as well. Loads of first time buyers in the market in 2025, and that definitely doesn't look like it's stopping in 2026. First time buyers being in the market is really, really healthy for a fluid market. So that's a real positive there. So let me just run through these. So in the month of November, total purchase searches of non-first time buyers, almost 450,000. Total purchase searches, first time buyers, 265,000. So what is that? For about 700,000 searches for non-first time buyer, first time buyer. You then got buy to let purchases there on the left hand side. So plenty of searches going on, even if they are down month for month. Now, if you look at this here, the 7 day spread of purchase search, so the blue from September all the way through November, you can see it's actually pretty steady there at just under 200,000. So shows that there is just steadiness despite all that uncertainty out there over the budget. And then, as I just said, product availability, whilst this is only tracking back a year, you can see there's been a spike in recent months. Lenders are offering better rates, more products because they're wanting to do business, which is a really good sign ahead for 2026. Again, when we look at the purchase of the blue line, you can see here sort of steadiness between 2023, bit of a pop in 24. I think because people were trying to get ahead of the curve for the stamp duty deadline in April, and then it's dropped back down this year. But again, not a million miles away from what it has been in 20 to 23. So again, some good signs there. Already touched on this, so things are down month on month. Not unsurprising. I think we'll see a positive return through the coming months. Again, year on year down If you compare November with November, again, people chasing the stamp duty deadlines, that doesn't surprise me. And then interesting stats here. So 2-year fixed mortgages now account for 52% of the market. 36% are 3 to 5 year, and then 5 to 10 year is 11.75%. So you can see here that a lot more people are going for the 2-year fix now. That is a sign of they think that rates are pretty steady. They're not going to get much lower than they are, which shows that, yeah, there's positivity in the market. And I think that will hopefully increase consumer confidence and there will be more transactions throughout 2026. Right, onto the house price indexes. So let me just move my zoom out of the way. So Rightmove reported a larger than average December monthly drop of 1.8% and ended the year 0.6% lower with asking prices than they were a year ago. But they are expecting 2% growth in 2026. So they are expecting, whilst the data hasn't come out yet, a bigger than usual Rightmove Boxing Day bounce in terms of activity and traffic to a website due to that pent-up demand from the budget uncertainty. The early signs that they found from the budget rebound with a number of top end London sellers up 24% week on week. And obviously, those London sellers are the ones who are going to arguably be impacted most by mansion tax, etc., etc. So, number of new sellers come to market in the first half of the year in 2025 was 9% ahead of year before. 4% below in the second half, and then buyer demand was 3% up on 2024 in the first half, 6% behind in the second half. So a game or year of two halves, but still positive overall with number of sales agreed 3% up on 2024, which is pretty good going. So first quarter was crazy because of the stamp duty deadline. The last quarter was difficult because of budget. You kind of got second quarter is a bit of a hangover from the stamp duty, and third quarter was a bit of a unknown because of the uncertainty across the budget. So you've had a really, really busy Q1, which made up a lot of the year. And then the rest has been a little bit sort of plateaued there. But Rightmove go on to say that improved buyer affordability, plenty of choice of buyers suggest that the market is going to look good in 2026. And they anticipate more of the first half of 2025 as opposed to the second half of 2025 as we go forward. So if I just scroll through a few things here. So the price fall in December, larger than the 10-year average of 1.4 at 1.8%. I've touched on the Boxing Day bounce that they think. So budget uncertainty, they surveyed 10,000 movers and it revealed that nearly 1 in 5 are waiting for the outcome of the budget to resume. So 20% give or take. So those 20% coming back into the market now. I've looked at data from Rightmove, on the market, Zoopla, Barclays, Savills, and it's all saying there was lots of people sat on their hands waiting for the budget, and most people's decisions haven't actually changed following the budget. They're happy to crack on and move, which is a real positive there. Um, I've already said, Rightmove are expecting a 2% rise in 2026 to house prices. And then down here, I touched on this a few times. So average stock per agent, you can see pretty steady throughout the year. Time to secure a buyer, pretty steady. Um, I will probably touch on this in my next update in February, actually, in terms of if sellers want to get sold in 2026, they'd be better off coming to market sooner rather than later to beat the spring rush. Come on when there's loads of traffic on Rightmove from buyers, New Year's resolution to move home, but the sellers don't quite necessarily hit the market until your March, April, May's. So it's actually wiser to get on the market in your January, February's, early Marches to beat that competition from other sellers and be there whilst there's pent up demand from those Boxing Day bouncers and those who are the pent up demand from the budget as well. The other bit I just want to touch on is affordability trends. So you can see here, look at how much it costs for rent compared to the average mortgage payment at a 10% deposit. A lot more people put down 10% deposit as an average. And then affordability to buy a first home. I think 2/3 of all mortgages are joint incomes. If you look at the joint income here, that dark green line compared to the average first time buyer asking price, that's why we're still seeing lots of first time buyers in the market. There's also research from Barclays. If you check my LinkedIn newsletter when it comes out, the amount of first time buyers, second steppers who are receiving help from the bank of mum and dad or grandparents, so friends, family, etc. Right, on to Zoopla. take a quick swig of my drink on this. So Zoopla's index came out just before Christmas. So key takeaways. Zoopla reckon we've hit a 3-year high for home moves, 1.2 million transactions in 2025, the highest number since 2022. My data that I've analyzed suggests that that is going to be the case, that we're not going to be far off 1.2 million transactions, just whether or not the solicitors could get them over the line before they broke off Christmas. Better conditions for buyers. You'll notice this throughout all the indexes. So sales being boosted by steadier mortgage rates, raising of wages, along with mortgages becoming more affordable to the average person, particularly with the regulations, the lending criteria being less strict. House price growth is slowing down. Again, you'll notice that across the reports. So whilst more people are buying, house price growth has cooled from the 1.1%, to 1.1%, down from 1.9% seen in 2024. First-time buyers continue to lead the way. They are the most common buyer group, accounting for 39% of all house purchases. Super continue to say demand is high, but sales depend on affordability. So sellers can't just go, well, plenty of buyers out there. They can borrow more money, therefore I'll ask more for my house. That's certainly not the case. And then going forward, they predict a stable 2026 with prices predicted to rise by 1.5%. And they think there's going to be about 1.18 million transactions. So looks like we're becoming pretty normal at 1.1, 1.2 million transactions. As I said, about 5% of the market turning over every year. So if you've got 1,000 properties, let's say in your hyper local area, you got to think, okay, there's 1,000 properties. How many of those are going to transact? On 5%, it's going to be about 50. Okay, how much of that market do I think I can take, or what do I need to take to earn the money that I want? So again, if anyone wants to work out those numbers for their area, give me a shout. Right, so if we scroll down, so UK transactions, as I've just been touched on, if you look at the last 10 years, ignoring COVID and 2023, so COVID obviously market shut down for a little while, so there's less transactions, and then 2023, obviously there was the spike in interest rates, which caused a reduction in transaction volumes, and ignore 2021 for the fact that we had stamp duty, holiday, record low interest rates, and just the craziness of COVID when the market was released. If you ignore those three anomalies, the more normal market suggests 1.1 to 1.2 million. So again, work out your numbers on that. What Zoopla highlight here as well is there's 9% higher than last year in terms of transactions, in line with the 10-year average that I've been touching on. And the total value of homes hit 367 billion in 2025, the highest we've seen since 2022. Really, really strong recovery in the market from where it was in 2023. So really, really positive there. If we look at where they say the end of year slowdown was, so 4 weeks to 14th of December. So we've got 2 weeks kind of before the budget and 2 weeks after. Demand still down, flow of new supply down, sales agreed down, stock levels still a little bit higher. I think that that is going to be roles reversed the longer we go into 2026, as that pent-up demand definitely gets released. It was a bit of a killer. The budget happened as late as it did. The amount of months there was of speculation leading up to it, and then you just had Christmas at the end of it as well. So arguably, as I said earlier, a third of a year kind of just wasted with people sat there going, well, let's see what happens. But I think that that will mean pent-up demand in 2026. As I've already said, first-time buyers are a huge part of the market. When you've got lots of first-time buyers in the market, that's a real positive. It means there's a healthy market. It means that there's fluidity. There's someone to complete the bottom of that chain, which is really positive. And you can see that it's the buying group compared to the 20 to 24 average. As rents continue to go up and as interest rates have come down, it means that first-time buyers will continue in the market. Cash investors, buy to let, you can see have dropped down a little bit. But it's good to see that existing owners with mortgages, which again, second steppers, those first time sellers moving on to something else, it's good to see that they're kind of returning to the market as well, because it's all well and good having first time buyers, but if the property they want to buy isn't making a move, it then kind of causes issues at the other end of the market. So Zoopla is saying house price growth 1.1%. higher than a year ago. It is below the 3.8% average inflation over the last decade. So in terms of house prices, inflation, wages, interest rates, kind of got this balance here, which is why we've seen the activity in the market that we have. And then this bit here, so despite a boost to mortgage affordability over 2025, the Zoopla data is highlighting if you're looking to buy cheap homes from a year ago in London and Southern England, largely due to higher stamp duty costs, they're paying more in regional markets, which is supporting faster levels of price inflation. You can see the north-south divide there. I've touched on this for a while. North Wales, Scotland, in Northern Ireland, Scotland, Wales, the north are performing a lot better than where house price earning ratio and affordability is stretched a lot more in the south and particularly London. Um, so lower house price growth as markets adjust to higher mortgage rates. So you can see the crazy house price growth we've had here in a lower interest rate environment. Then interest rates came up, and then you can see what that's done, and then what they're predicting going forward as well. So there is going to be a little bit of growth in the market. Interest rates might come down a little bit. So if there's any buyers you're speaking to who are like, oh, we're going to see what happens, literally, like you can see what's going to happen. Interest rates are not going to move much more. House prices are going to get more expensive. If I actually added up the amount of money it would cost them by waiting, so rent paid, money eroding in their bank due to inflation for their deposit, interest rates not getting much cheaper, and house prices getting more expensive, the best time to move would have been yesterday. So what will happen to prices in 2026? So they're expecting modest house price growth of 1.5%, followed by 2.1% between 27 and 29. And again, they're expecting not far off 1.2 million transactions. So pretty steady market there, according to Zoopla. Right, on to Nationwide. So Nationwide have got a couple of bits to run through. So I'm just going to zoom in on this. So keyword from Nationwide and one I use a lot is 2025. The best way to describe it is resilient. They're expecting house price growth between 2 and 4% in 2026. They highlight here what the stamp duty deadline did in April to the market. So you can see over the past dozen years, every time there's some form of stamp duty, we have a push in transactions and then it drops down. You'll notice they say about the slowing of house price growth. So annual price growth slowed steadily from 4.7% at the end of 24 to 2.1% in the middle of 25 to 1.8% in November. And then on the next tab, I've got what the December data was as well, and it had slowed even further. So if I go on to that actually and zoom in, so slowed to 0.6% in December from 1.8% in November. So again, slowing down. So average house price according to Nationwide is now 271,000. If I just quickly scroll down here, it's not a million miles away off what its peak was at 273 and a half. So only a couple of grand shy, which is positive. A lot of this data is very much the same from the previous tab, but the bit I want to highlight as well is flats continue to lag. So if you actually look at how much property prices have gone up in recent years, flats have gone the other way. And then house price to earning ratio, I've already touched on this, but according to Nationwide, it is now below its 25-year average, and actually the best it's been in over a decade. Hence why we're seeing the activity in the market that we are. So positives to be had there. And you'll notice on their annual house price change, there's only one area which is actually in the minus territory or zero to minus, which is the east side of the country there. Right, onto home.co.uk. There's a few different things I could touch on here, but what I am going to highlight is the notable glut of unsold stock on the market that formed over the summer months is now reducing rapidly. I touched on that earlier, thanks in part to seller hesitancy. Portfolio count for England and Wales is now just 1.2% more than December 2024. Stock dropped by 40,000 during November, and this large reduction will help to support prices whilst it lasts. Typical time on the market for unsold properties continues to trend higher, and it's currently 7 days more than in December last year. So stock levels, if I zoom in on this, so you'll see here that they did spike through the sort of summer of 25. The highest had been since autumn 2012. But you can see here now that they've dropped down to actually more normal levels that were seen before COVID that you can see here. So actually, order signs, mortgage approvals, transaction data, house prices, affordability, house price earning ratios, stock levels, everything is pointing towards going back to pretty much where we were before the pandemic, which wasn't a bad place to be. In the teens, late teens of the UK property market was a pretty good market. So if we can have more of the same, I certainly would snap someone's arm off if they could give me that. If I scroll down here, so average asking price for home.co.uk down 0.5% month on month and up 1% annually. And then time on market, 179 days for the average time on market of a non-sold property, 6 months. There is loads of gold and opportunities out there to go and target on market properties. What I would also be saying is, I think, is it traditionally Christmas decorations go down on the 6th of January? I'd be checking listings on Rightmove. So go to Rightmove, Zoopla on the market, put it in order of most recently listed, and look at any of the properties that still have Christmas decorations up. Go and target those properties because if those estate agents are not already changing the photos around to something which is not Christmassy, are they still hung over from Christmas? Are they missing out on the January traffic? So yeah, just go check those Christmas decorations because that could be an open goal for you. Make sure on your own listings as well, you've updated them as well because you don't want another estate agent doing that to you. Right, nationwide, pretty similar to what they say. Nationwide, sorry, Halifax. So monthly stable, quarterly up 0.4% and an annual 0.7% rise. So broadly unchanged in November after a 0.5% rise in October. They're edging up to another new record high at just below 300,000. And then slower rate of annual inflation largely reflects the impact of strong growth a year ago. And then some good bits here from Amanda at Halifax. So average house price is broadly unchanged. Annual growth is slowed to 0.7%, the weakest they'd seen since March 24, and it reflects the effect of much stronger price growth this time last year, again in the lead up to the stamp duty deadline. The consistency in average prices reflects what has been one of the most stable years for housing market over the last decade. Again, certainly not anything to be sniffed at. Even with the changes of stamp duty back in the spring and the uncertainty over the budget, property values have remained steady. Again, really, really good going. Just shows how resilient the UK property market is. So slower growth may disappoint some existing homeowners in terms of equity growth, but it'll be welcome news for first-time buyers. So steady house prices, lower interest rates, better affordability is going to bring more first-time buyers into the market. And looking ahead, market activity is steady. Their expectations of further interest rate reductions to come. They anticipate property prices will continue to gradually grow in 2026. So pretty positive news there from Halifax. Just going to check. I knew that was going to happen. That's annoying. So UK House Price Index, October 2025. So this is the latest data from Land Registry. The average UK house price, 270,000, up 1.7% on a year ago, down 0.1% on a month ago. What I did want to show you on the other Land Registry site was the amount of house price growth over the past 5 years, but unfortunately it's timed out. But we're going to go straight over to this page from Zoopla. So a little tip I'm going to recommend for you to be targeting properties. This could be social media, text, email, blog, letter campaign. So what Zoopla basically reported in November was 2.5 million homes have seen their increase in value of over £100,000 over the last 5 years. So if I scroll down, so it has been a mixed bag. So 1.4 million homes have seen their value fall by at least £100,000 in the past 5 years. That will be some in London, that will be flats, etc. Latest research shows that most homeowners have seen steady gains of just under 20% over the past 5 years. More than 2 million have gained over £100,000. So these are the stats here. If you want to know what they are for your local area, hit me up and I will let you know those numbers. But as I said a couple of minutes ago, this could be a really good campaign. Here are the national statistics from Zoopla. Here are the local statistics for Milton Keynes. If you'd like to understand how much equity you have made in your property over the past 5 years, scan the QR code for an instant valuation, or scan the QR code to book an appointment, or phone us on this number, email us, or text your address to this number, and we will send you a free home equity report. So a really good way to expose those people who are potentially on the fence about moving in 2026 and are just curious to know how much equity have they gained and is it actually something that they could do. So scrolling down here, so this is what I said. So 1.4 million homes across the UK have fallen in value by at least £100,000. Maybe you don't want to talk about that too much on that. But there's some really good bits here from Zoopla. So why the 5-year view matters. So pandemic changed the way what buyers are looking for. More people seeking space, greenery, better value outside traditional commuter zones. So that has had an impact in different areas of the country. Then in 2022, we have mortgage rates rise, affordability tighten, demand shifted again, and helping sellers make the most of their paper gains. So whether it's 100,000 or 10,000, it's worth taking stock of how much things have changed since 2020 and what this could mean for your next chapter. Great language there to put in a social media campaign, text, email, letter. So that is the 2025 market update from me. Thank you very much for tuning in to the first episode of 2026. I'll be back every single month to do more of these. In February, I'll be reporting on the January data. So January 25 versus January 24. How did January compare to December 24? And then on the last 5-year average as well. If there's anything you want me to include for future episodes, please do let me know. If you do enjoy watching this, please do like this video. Please do hit the follow subscribe button as well. I want to increase number of subscribers I've got on YouTube. And if you do really enjoy the content, please do leave me a review on Google as well. I'd really appreciate it. And just drop me a message as well if there's anything else you'd like including going forward. But Happy New Year, everyone. Thank you very much for tuning in, and I will see you same time next month. Thank you and goodbye.